Once upon a time, the internet connected people.
Changed the world. Of open source technologies come from virtually nowhere.
Then it connected data, but it still couldn't connect trust until someone decided it should. Today, over $80 billion moves through smart contracts every single day. But speed and security, they still don't speak the same language. That's where Zigchain comes in. A network built to bridge both. 10 times faster transactions, near zero gas fees, enterprise-grade safety. Not another blockchain, but a foundation for the next generation of builders. And leading that movement is Abdul Rafay Gadit, a voice shaping how Web3 will scale beyond limits. Because the future of trust won't be written in contracts. It'll be built, block by block. This is Abdul Rafay Gadit, here on the Yellow Podcast.
Hi, so today I'm joined by Abdul Rafay Gadit, who is the co-founder of Zigchain. So really excited to have you here. Thank you for joining us. So Zigchain is actually creating infrastructure, providing infrastructure for wealth generation, which is really interesting. So I just want you to just give us a quick introduction, like 30-second elevator pitch, what it does and why should people be interested?
Yeah, absolutely. First of all, thank you very much for having me here today. See, wealth generation, wealth is an aspiration for everyone. It starts as a financial independence, as a journey, but wealth is something that everyone, really wants in the world. What is Zigchain doing? Essentially, we want to bring every investment opportunity to everyone in the world, regardless of where they are, how much amount of money they have, what kind of access they have. We started as a single protocol called Signally 8 years ago, which was connecting the best traders in the world with the investor base across the world. Free platform based on success fee. And when we kind of were morphing it into DeFi, we realized that there is a big gap when it comes to, having these opportunities across the world available. And hence, we started this journey, launched our blockchain a couple of days ago. So that's why people should be.
Just 2 days ago.
Yeah, 2 days
I
ago.
didn't even realize that.
Yeah,
I've
we just
seen you
replied.
around at other events, and I just thought you
Absolutely.
were.
Yeah, so
Okay,
we had that.
congratulations.
Thank you very much. The infrastructure was there.
Yeah.
In terms of Signally, we have like 1.5 million users. We managed $300 million in asset under management. So we have an active community, active token for last 4-5 years. We just took them from a single protocol into a whole blockchain.
Great. Okay. So, what was the question you wanted me to ask you before this?
No worries. So you were about to ask that, okay, you talk about wealth generation, but then what are the mediums, how you want to do it?
Yeah. What resources are you using to achieve that?
Yeah.
Okay. So you talk about wealth generation. What are the resources that you're using to achieve that?
Yeah, so I think when you go basically down to the execution level of this kind of a vision, there are two things that we are pretty much focused on. One is the decentralized, the core DeFi, which you have seen over the last 10, 11 years. And the second concept is around tokenization. I think these are the two most aspect. Tokenization would be a key to bring the Web2 audience into Web3 without them even knowing that they're using the blockchain. That should be a beauty of it. And the core DeFi is very important to kickstart the blockchain. Like we have all the primitives going live on the blockchain, and we should have like $500 million in TVL in the next 3 months.
Wow, that's very confident.
Thank you.
Wow, well done. So, tokenization is often pitched as a $1 trillion opportunity, but most projects struggle with your adoption. So, what real-world demand signals convince you that tokenization is moving like beyond theory?
Yeah, so you see, it's like a chicken and egg problem because when you look at the tokenization, people think of tokenization as a technology. I think tokenization is a four-sided problem. You have a technology, you have a regulation, then you have a sell side, and you have a buy side. Three of these pillars are pretty much solved. Like if you look at the technology, there are 100 plus technology provided in tokenization, no issues. We have our own tech stack as well. We white label someone. We did not even build that, it's so easy that way. Second one is regulation, which is a journey, just like in any industry. We acquired like the couple of licenses as a foundation to give it to the dApps to come and build on us. Third one is the buy side, sell side, means the ones who are issuing the giving the assets that has to be tokenized. Again, no one gonna say that they don't like money. Everyone likes money. So if I go to a hotel in Dubai and ask them to tokenize them, they would say, yeah, hell yeah, why not?
Yeah.
The biggest part is the buy side, which is the distribution.
Yeah.
And this is something that we have seen in our journey in the last 8 years when coming from Signally to Zigchain. We saw that the retail and the semi-investor, H&Ws, they have a lot of demand of good investment opportunities, right? And then, we have been doing a lot of deep downs across the world, either be in Dubai or UK or Switzerland. And across the world, there is this liquidity is there, but it's fragmented. And we have like pretty much big use cases now where we can clearly tokenize things like private credit, private equity, infrastructure projects, real estate from one part of the world and have it offered cross-border into the other part of the world, not only to the retail but to the institutions as well. And I think this is a clear signal for us. We are already seeing like almost a $15 billion of tokenization pipeline just on our protocol. So yeah, the signs are clear.
They're big numbers. They're
Yeah,
big
we have
numbers,
been-
bold statements.
We have been around for a long time, so
Yeah.
yeah, this is what we've been working on.
Yeah, no, it makes you proud. Like you're doing really well. So
Thank you.
well done. So one of the big challenges for tokenized assets, a big challenge for tokenized assets is interoperability, and that's not just across blockchains. It's all in banks, regulation regimes, and other barriers as well. So do you think genuinely that interoperability is achievable, or do you just think that with tokenization will remain like siloed for years?
No, so think about it like this. 10 years ago, when you used to fly into a country and you have the roaming on, you would have to turn on the roaming and pick up the network that you want, right? But you don't do that anymore, right? You just turn on the roaming, it's auto pick. Think of the blockchains like this, exactly like this. 5 years time, it will not be the case. And I'll tell you why. It is not going to happen because the people in DeFi would create something so awesome, because the bridging and the smart contracts risk will be there and there will be awesome things, yes. But think about it like this. If the players like Robinhood, players like eToro, players like DarwinX, and the localized dApps like Kareem and Uber and Bcash and all, if they start integrating blockchains and having those products, now think of it like an exchange. When you go on a Binance and you trade some product, you buy, let's say, a token. Do you even care which chain is it? You don't care, at least at the trading level, right? And you don't even know, like it does not matter, like 10 networks open, but this is there. This is the kind of UI UX that's eventually gonna come in next 3 to 5 years for tokenized assets. Large banks like Swissquote, Pictet, Amani, all these banks are now integrating tokenized products. From a user standpoint, chain would not matter, and this is how it should be. Beauty of blockchain is when you don't even know you are using the blockchain. So it will be solved.
Yeah, one day. I think everybody says it and imagines it happening in different ways. I think yours sounds quite realistic. And I like the analogy of that.
Yeah, exactly.
You're right. Yeah, before you used to.
Exactly.
Really don't. Yeah. I guess it's to do with demand though, isn't it?
Yeah, absolutely. Ultimately, people like the process of tokenization. It ultimately reduces the cost, and with some very interesting innovations that you can really fragment out very large opportunities. For example, OpenAI.
Yeah.
How many people can actually tap into OpenAI private market right now? Very few. But we are working on something, and in the next 60 days, inshallah, even with $1, you would be able to participate in OpenAI private market. There are ways to do it. People like us who come from TradeFi originally and now into the DeFi 10 years mix, you can come up with the innovative products. And yeah, I mean, interoperability will be achieved that way,
Yeah, inshallah.
inshallah.
So many tokenized projects, they emphasize efficiency and transparency, but liquidity in secondary markets has been weak. So what lessons can the industry learn from the failures of early tokenized asset platforms?
So if you remember, tokenization is something not very new actually. Um, STOs happened in 2017,
Yeah.
and NFTs are like a morphed version of them as well. But what was the problem back then if you think about it? Regulations were not ready and the technology was not ready.
Yeah.
Unfortunately, the only chain you pretty much had was Ethereum,
Ethereum,
and per transaction was like 20 minutes and $30 or even $100. And regulator was like, what the hell is this thing? So no one was ready. Exactly. But now technology is super fast, super smart. You click here, it's done there. Fast, super cheap, and regulators are ready. So if you look at Dubai, so for example, we got the first ever fund tokenization license out of DIFC. We got the first ever full FSCA license out of South Africa to tokenize any kind of SPV as well. So you look at the regimes and you look at that. Now, when you have the regulator coming up on a certain product, how do you create a secondary market liquidity? You cannot still take these instruments, which are right now illiquid and all, and directly give exposure to the end user. But what is happening now that there are a lot of DeFi products that are creating wrappers around it, and those wrappers are then available through the wallets. Actually, Ready Wallet is a great example. This is how the secondary market liquidity gonna come in. It is again a journey, and you would see a lot of lending borrowing protocols creating these services where you can actually put your tokenized asset, tokenized Tesla, for example, as a collateral and borrow in your wallet. Your wallet will truly become your bank account. So that's how the secondary market's gonna work.
Yeah. I mean, talking about the future and how you imagine things evolving and everything else, that looking ahead like 5 years into the future, do you see tokenization and blockchain rails primarily reshaping institutional finance, retail finance, or both? And which side do you think will move first and why?
I think people underestimate the speed at which the banks can adopt, and I think banks are adopting. If you look at the recent 2-3 regulations, which are very interesting in the U.S. as well. So the Genius Act, the Clarity Act, and there is now FINMA is telling banks to start accepting cryptos as the collateral for the home loans. Now imagine again, think of it like this: if I have a whatever wallet, okay, let's say Trust Wallet. And the Trust Wallet, if I have tokenized Tesla, for example, then technically speaking, using the same wallet, I can put that and I can take a home loan and I can give it. And similarly, any tokenized fund or anything, which means that I can take a cross-border risk or any kind of product in the world out there, have it in my wallet, and get the loan. This and banks are not far behind, by the way. Goldman Sachs, JP Morgan, Lombard Odier, all of them are spending millions and billions of dollars in creating the private blockchain infrastructure as well. So I think consumer finance will change. What needs to be seen is very simple. Are big players going to are big players going to pass on the cost advantage to the end user, or are they just going to increase their margin? And this is where I think the ethos of the true DeFi comes in, that where the cost benefit needs to be passed on, and it does not need to be built into the PNL. And this is where people like us come in. We are like the Robin Hoods of DeFi. We don't build in our margin, we pass it on to the end user.
Fantastic.
Thank you very much.
Thank you. Such great answers, great insight, and you don't stutter. I love that. So it's like you practice it. But it sounds really promising and exciting what you say, and reassuring for everybody in this space. So thank you so much for your time today.
Thank you very much for having me.
Yeah.